Hi guys, welcome to this short analysis of USD yen. It's the 12th of February 2019. I'm going to review the analysis on this pair, break it down to ascertain where the price is heading. It is a good opportunity, learning opportunity for you guys to see how I conducted analysis, how I analyze the market, conduct an analysis, establish the directional bias, and of course I'm not showing the execution side of it in these lectures, but you can use your own specific strategies for the purposes of execution based off the trading plan which I discussed. But you can always take advantage and use this analysis in line with your analysis and strategies to approach the week. Please focus on what I'm teaching, what I'm suggesting as in terms of analysis, technical analysis. It will enhance your knowledge and understanding of the markets. So let's get started on this. USD yen, we can see that the price has been in a bearish movement, low high formations, and what I'm expecting the price to carry on like this to these monthly levels. That's what the price action is at the moment. You can see the price is making a lower high formations. So as long these low high formations remains intact, then you would be expecting the price to go down. So this is the threshold that the price has to break this level above this weekly levels at 112. It's 112.70. The price has to break that level to confirm any bullish momentum. You would be expecting the price, it's in the retracement phase, yes. The price rejected nicely, came down, it's returning. So it's in the retracement phase, and as long price holds here, rejects here, that you're expecting the price to go down. That's what the monthly analysis is. And guys, please understand, you don't do your monthly and weekly analysis in isolation. You have to connect your monthly, break it down onto the weekly, and further break it down onto the daily. In my training, I teach you how to break it down further on H4 and H1 to devise a trading plan before you break it down further for execution timeframes on M30, M15, M5, or M1 for the purposes of entries and exits and management of the trade. But let's focus on the analysis here. So that's what we have established so far. So that's what we have established. So we mark this as a reference point. But remember, the monthly level is at 112.40.66, and there is a resistance, trendline resistance, trendline weekly resistance there, huge engulfing candlestick. Of course, you had a strong rejection, price pulling back up, which is a normal expectation from the price. So this remains your sell zone for the purposes of taking a trade with the trend, and any retracement towards the upper side, upwards, is a retracement move within, which price has already been in since it held at 138.47. Now, just give me a second. Let's go on to break it down further, guys. So the price rejected, you got dodgy formation at that monthly level at 135.108, and then 108.66, and then we got an engulfing candlestick, a bit of pullback, another opportunity there, and the price is rising. Now we are approaching an EMA, 50 EMA here. This retracements, let's try and see Fibonacci levels where we are. So it's interesting to see how the price reacts from these levels. Well, I'm expecting the price to carry on and reject any of these areas. Now that is the trend with the trend, trade with the trend, the direction with the trend, a plan with the trend where you are seeking to find a lower high formation to take the trade with the trend for another lower low formation. But you can always take advantage of a counter trend trade, which you should always already be in. And it was a pretty clear counter trend trading opportunity. And most of the students have shared the chart with me, have explained that they have taken advantage of it, which is exceptional. And guys, our precision is exceptional here. We've been very precise in our trading, and that is the only reason. And the first time I've started with 2 lots, gradually increased to 3, 4, 10. I've traded with 50 lots. I've never traded on a single account by myself, and that was earlier last week and the week before. It's all about precision. Now, precision begins from the trading plan. Eventually, you keep on breaking down the price action up to the executional timeframes. That's what the precision is. And it's all about precision at the end of the day. That's my opinion is. And I've really changed my opinion in last year since the development of this new way of trading, multi-structural analysis, breaking down the price action. It has the objective was to seek precision in the markets. So average stop loss is like 715 pips. Average profit is at least 40 pips. Normally market rallies are able to catch 140 pips and 120 pips move. That's the advantage. So let's break it down further. Nicely, price is forming, as you can see, price forming a higher high formation. Higher low, another higher formation, guys. So right now there is no opportunity. You can look for buying opportunity there. A pullback, you can look for buying opportunities. It can carry on. So right now we are in the retracement move, but I will be interesting to see how the price retraces acts around these levels. And if I see the sellers entering into the market and price forms a lower high formation, that I will be looking for selling opportunity. Today was an absolutely clear buying opportunity here. As you can see, you got a hammer formation, another hammer formation, stop loss below these, which is not more than 20, 25 pips. Setup stop loss, not the execution stop loss. It's your setup stop loss, and execution is further breakdown of that setup to M5, M15, so that you can literally reduce your stop losses. And there's a clear trade of 79 pips. So here we are. That's where we are, guys. Carry the prices in a bullish market variation and stroke market structure in a retracement move. My trading plan says this: you can take advantage of this counter trend move if you know the strategy, if you know the rules to trade this. And once that move completes, then you can look for the selling opportunities, which should be the major move and aggressive move, because that is the move with the trend, and as long price remains below the weekly level at 112.70. So there we are. I hope you enjoyed the session, guys. I will be uploading recordings like this every week, few recordings, and try to see how I analyze the market, try to understand how I try to break down the price action. This is the breakdown of the price action at its finest, I can tell you this. So please take advantage of these free videos, and if you have any questions, you can always ask and leave your feedback, which is much appreciated. Thank you very much, and have a profitable trading week.